Okay, I just want to hop on here and kind of go over my day trading strategy and a couple trades that I took today. So whether you're trading, SPY, QQQ, or trading futures, ES or NQ, doesn't really matter. It's all the same. I like to chart on SPY and QQQ. It's because they show the New York Stock Exchange volume. Um, you don't get caught up in the overnight volume, which shows up on the futures charts. That's just my preference. So the first thing I like to do when I come in is I look at the daily chart. So this is SPY on the left, QQQ on the right. Now let's look to see. We have the 9 EMA is this teal color, the 20 is the yellow, and then the 200 is the red. And let's kind of gauge it and see, what direction does it look like we're going in. And I do that based on the 9 and the 20 mostly. If they're both sloping up together in alignment, that's bullish. Obviously, when you're above the 200, it's more bullish than when you're below the 200. So you could see here on the Qs, these started sloping down. We broke the 200, came up, retested back near the 20, and then flushed down. And then now we've been recovering. We got back above the 200 here. The 9 and the 20 crossed back up. You can see we kind of broke and retested near the 9 and the 200 here and had to move up. And then now we've been consolidating, had to move back down near the 20. And then today we had a gap up and a move up that kind of originated near the 20 on both of these. So the 20 is a really good gauge for kind of the mean of where you expect price to kind of sling back to. So like when it gets too extended from it, it'll come back, gets away from it, comes back, gets away, comes back, and then once it breaks it and it starts to slope back the other way, it kind of works in reverse. And sometimes when it's a really strong trend at the beginning, um, you can get the bounce off the 9 EMA. That's why I like to have it on there as well earlier in the trend. And then obviously, Friday we broke below the 9 on the Qs here, came back near the 20, and then we gapped up this morning and had to move up. So that's the first thing I'm looking for is kind of where we at, what's the bigger trend looking like. So coming in today, we didn't have this candle printed, we just had this one. So I'm looking to see, where are we going to open at? If we're going to open inside of, Friday's range, I'm going to be cautious until we break above it to look for longs. Or if we break below it, it's a cautious short to take because we have the 20 EMA right below, and we also have this support level here. So it's a good idea to kind of have that bigger picture in mind before you do anything on the day. And then what I'll do is I'll just take, Friday's candle and I'll just mark the high and the low. Let me zoom in here. And then, if you break above Friday's high, or if we are above it and we hold above it, I'm going to be targeting this candle's high and then this candle's high. So these daily highs and lows are really important levels for targets, support and resistance, supply, demand, whatever you want to call it. Just areas where the high of the day, where price stopped that day, that's where there were a lot of sellers at, in New York session volume. So there are definitely areas to keep in mind compared to the futures candles, which will be usually bigger, obviously, with less volume. So it's good to have these, the SPY and the QQQ daily highs and lows in mind for targets and levels to look out for. So let's see here. So that's what I did today. If you zoom in to we can go to like the 2-minute chart, both of these, you'll see that. So let me go to a 30-minute chart. It'll be easier to see. Change this to my day trading chart. So this was Friday's high here, right? So we gapped up We opened right here today. So in my mind, I'm thinking only longs, right? Um, unless we were to come back below previous day's high. If we broke below that, then I would look for shorts back down to Friday's low. But you're really gauging the daily candles. They're really important for gauging direction. So overall bigger picture, we're bullish, and then we gapped up above Friday's high. That's also bullish. So in my mind, even though off the open, you can see this morning back here, off the open, we did drop, but I wasn't looking for any shorts there. So when I'm looking to day trade, I'm zooming into usually the 2-minute or the 5-minute chart. This is the 2-minute here. I'm looking at SPY and QQQ. So you can see we were pretty weak off the open, but we recovered pretty quick. And then once we reclaimed back above the red 200 line here, that's my signal to be looking for longs. So I'm looking for pullbacks to this yellow line here is the 15 EMA on the 2-minute chart, and then the 45 EMA on the 2-minute is the green one here. So the first trade I took today, after we reclaimed back above the 200, I was waiting for a pullback to this 15. I didn't want to chase it up here. We did finally get a pullback to this pre-market high level in the 15 here. I took a long. You can see this is the pre-market high. I took a long after this green candle closed. And I was hoping we were going to get some follow through. Stop was here. I actually got stopped out on the first trade. Actually, let me switch over. I'll show you on the futures chart. Executions. So it's the same thing here. You can see I'm trading a couple of take profit evaluation accounts. They're up a few $100 each today. I started the day with like a $150 loss. Show ya. So, like I said, this 200 is kind of the line in the sand for me for day trading, right? So when price gets too extended from it, I get to come back to it sometimes. So that's why I'm not looking for any shorts here with the bigger picture context. So we did snap back to it. We got above it. We got above this, the high from 2 days ago. I was hoping we were going to get a retest on it, but we didn't get it. So I waited for this pre-market high level to retest right here with the 15 as well. And then after this candle closed on this next candle, I took a long. Like I said, I got stopped out here. No big deal. You have to look at trading as a game of long-term probabilities. So you want to trade basically like a casino. So if you have, even a slight edge, you want that edge to play out over the long term, and you don't want to get caught up in, losses and trying to make back money in the short term. Just know that if you do have an edge over the long term, it's going to play out. So you don't have to worry about taking a loss, right? So that's kind of the mindset you want to adopt in trading once you have an edge. So my edge is very simple. Like I said, I look at that bigger picture. I'm looking at the daily candles, and I'm gauging the direction off of those daily candles and that bigger picture. And I'll zoom into these lower time frames for my entries. So like I said, this first entry, I waited for the retest of this pre-market high and the 15. We had a nice little reaction, so I took the long. My stop was under here. I got stopped out. No big deal. I have a rule where I wait 10 minutes until I take another trade. So I waited, 5 candles or so. And then after that 10-minute mark, we reclaimed back above the 15. And I got long again because it looked like they just took out some stops here. And it's going to happen. This thing could have just taken off, not done this, but this time they took out some stops. I got stopped out. It's a part of trading. So I got back in here, just 3 micros on each of these entries. And then you can see we started to get a little bit more momentum right here. but we can't really get going. We kind of just slowly were grinding up. And then we finally got a decent move up here. I took one off. But really that's kind of my strategy is I'm waiting for a price to retrace back to this EMA and preferably with a level as well. And once I see a reversal pattern, I'll just get in. My stop will go below it. And then I'm looking for a move away from the EMA. Like I want to see space from it. This is a decent little move. If you want to be really scalpy, you could take it off here or take some off there. But we never could really get away from it until here. And then that's when I first took one off. And then we got away from it again here. Took another one off. And then my last one, we're getting closer to, actually we were beyond 1 p.m., which is kind of my cutoff. I kind of trailed it a little tighter than I maybe could have. I kept it below this low here instead of just below the 15. So I got trailed out here, kept it a little tight, but I was happy with where I was at on the day. Then, we made another move up. I missed out on a little bit, but that's okay. So like I said, the main thing is just having an edge over the long term, not worrying about being perfect, just knowing that if your wins are a little bit bigger than your losses and you win a little bit more, you're going to have a positive expectancy over the long term. And that's what you really need to ingrain in your mind when you're day trading. And that will help you, when you take losses, as long as your wins are bigger than your losses, you're going to be fine in the long term. So you either need to have, a high win rate with like maybe a 1-to-1 risk reward. Me personally, I like to go for a little bit lower win rate, but have my wins be, at least 2 to 3 times bigger if possible. It all also depends on the environment and kind of how price is moving that day. Sometimes I'll go for more scalping type moves if we're not in a nice trend for the day. So, but today, since we're showing a lot of strength, we're breaking above these levels, and I can actually go back and show you. So let me go to the regular trading hour. So this is just regular trading hour levels. So this is Friday's action. This is today's. This is probably last Thursday's. Looks like, yeah, this is the opening candle from last Thursday. So that was the high right here of that day. So once we were above Friday's high, that would have been the first target, if you're able to get in a long here to aim for that. And then once we got above that, then it's last week's high, which was last Wednesday's high here, which is where we kind of dumped from that day. So again, all these levels are coming from the New York session highs and lows. So let me go back here. So yeah, once we're back over the 200, we break over that last Thursday's high. You can see we're above previous day's high. Didn't even retest it because we gapped up pretty good this morning. That was Friday's low in the New York trading hour session. And then I am still aware of the pre-market high and the low. Those can be important as well. So that's why, I took this trade here. We bounced off that and the 15 on the first trade, but it didn't work out. No big deal. Reclaimed back above the 15 with this green candle. Zoom in here. And then, got in on the next candle here. And then we ended up getting the move up. So in this move, you can see I just put I'm like a risk reward fib on here. So you can see my entry was right here. I had my stop right underneath this candle. And you can see, my first target, or my first sell, I should say, wasn't until like a 3-to-1 risk reward. My second one was a little over a 4, and this one got trailed out by like 3.5 times my risk. So That's the key for me is when you win, you want your wins to be bigger. And when you lose, you just want to keep them tight. Sometimes you're going to get stopped out. You're going to be, stop hunted. You're never going to escape stops all the time. So just accept it. And then, you reset and you know that it's just one trade out of, hundreds or even thousands. So you have to have that casino mentality. If you think about a casino has a very, very small edge over, people that gamble at the casino. A lot of the games, it's only like 1 or 2% edge, but that edge, they're not going to freak out about having, you know, someone make a lot of money off them on one hand or whatnot, because they know over the long term that 1%, 2% edge is going to play out. So they're not worried about it. So, and that's a really small edge. And look at how profitable casinos are. So if you have an edge that's like, 10%, 5%, I mean, that's double or triple the size of what a casino has. So, um, if you're able to have a 2 to 1 risk reward on average, you win half the time. That's a really, really good edge. So that's really all you have to aim for. So just depends on your style and your personality, but that's really the mindset to have, if you want to be a trader. So just fully accepting, any outcome. You have your risk set, and if the trade works, you're going to let it go, to your targets. Like I said, for me, usually on like a day like this, I want to get at least a 2 to 1, 3 to 1. Um, today we didn't really get that good push until around 3 to 1, where we got more away from the yellow 15. And you can use the 13, you can use the 15, you can use the 20 EMA. It's just kind of just preference. It doesn't really matter. But you want to have like a shorter EMA for momentum or trend. And this is a 45 EMA, the green one. So like when these two are kind of in alignment, it's kind of similar to like the daily chart that I showed you earlier with the 9 and the 20. When these are kind of aligned and sloping up, I only want to be looking for longs, preferably at levels retesting if possible. But I mean, you can put a trade on, when you get these reversals right back near the 15, like this green candle, you can get in after this prints. You can just put your stop down here. It's above the 15. These are in alignment. It retested this level. If you want to look at like previous levels that had moves from them. So you could literally just get in there on the close or when it just breaks the high. It just depends how aggressive you want to be. I typically like to wait for closes because you kind of get faked out, especially on the 2-minute chart. Or go to the 5-minute chart too. This is a 9 and 20 on the 5-minute chart. So on the same thing, it's just less candles though, a little bit less noise. I like to use the 2-minute because you can kind of get a little bit tighter entry on the 2-minute. But the 5-minute's really good too. Today you can see 9 EMA was holding really well pretty much all day, which is basically the same as that near the 15 EMA on the 2-minute. So you can see when it gets extended away from it, I want to be taking off risk, scaling out, taking off, new highs. This is a new high here, getting extended, take off some risk, take off some right here. And then obviously this one, like I said, I trailed out a little tight, but I wanted to be kind of done with my day. So I was happy with it either way. It didn't really matter to me. Then obviously these crossed here, you get a little bit of a move back down. But I do like the 2-minute 200 is a great gauge for kind of longs or shorts for direction. But if you want to be really aggressive, once this 15 starts sloping down, this 45 kind of flattens. Usually the one that's sloping more will win. So the 15 starting to slope down, 45's flattening, the 15's winning here. So you get a little move, you come back to it, test it. See it kind of start to break here a bit. Comes back up to the 45, and that'll happen. the more times these get tested, the more it's going to need to pull back and possibly take some stops out or whatnot and test a little bit higher. Then you get to move down close to this 200. Um, so it's a counter trend play, obviously counter to the overall bigger picture on the daily chart, and you're trying to basically aim back down near the 200 or some sort of structure that you see on the chart. If you're going to take, scalp moves back down counter trend, which it's definitely possible, but I like to be done by, no more trades after 1 p.m. Eastern for me. I tend to get chopped up in the afternoon just from experience. So I like to avoid trades, after 1 p.m. now. So, but yeah, that was my day today. Pretty good day. Like I said, the first trade was a loss, a bit small. Second trade, got back in when the level held, got back above the 15. Like I said, my rule is 10 minutes between trades, so I waited 10. We reclaimed it, got back in, kind of rode it up, to the 3-1, 4-1 ish, 3.5, and that was it for me. So I just want to come on here and kind of do a little trade review, and I'll probably do some more videos on my strategy and kind of go into more depth. So, but really pay attention to those daily candles on SPY and QQQ to kind of gauge, direction and kind of where we're at on the bigger picture. You always want to start with the bigger picture in mind, even when you're taking day trades. So otherwise you can get trapped. Just because we're under the 200 this morning doesn't mean I'm going to try to look for a short here, because I have that daily picture in my mind, coming into the day. I know, like, we're back near the 20 and we're getting to move away from it now. So the 20 is a great gauge on the daily chart. Even if you just remove the 9 EMA, you can see, look at this 20. It gets to it, it bounces off it, gets above it, bounces off it, gets back near it, gets back near it. Price gets away from it and then comes back to it a lot. So it's a really good gauge for kind of where we're at on the daily chart there. So, but I like having the 9 with it. Just when they cross and they're both sloping up, it's a pretty strong bullish move. You just want to be trying to look for reversal patterns back near the 20. So, all right, that's going to be it for today. I'm going to try to start making these videos. I'm going to try to do them every day, at least, a few times a week, to kind of go over some day trades that I take and some strategies. Just try to, help pass on any knowledge that I have to help people. So, all right, that's going to be it for me. All right, see ya.